Next up, we'll take a look at neutral chart patterns. Neutral chart patterns are considered neutral in the sense that they do not suggest a reversal or a continuation in the previously established trend. Prices can go up or down depending on a number of factors and not necessarily what was happening before. Now, what makes neutral patterns different from other pattern types is that price can go up or down before the pattern and can go up or down after the pattern for them to be considered valid. It's crucial to observe how price breaks out of the pattern and its direction, either to the upside or downside, to dictate the resulting trend. Here's our first example. This is the ascending triangle, and in this particular situation, we can consider it to be a neutral pattern. The ascending triangle can be considered a bullish continuation pattern or a neutral pattern, where the direction of the market before the pattern is irrelevant. What matters in this situation is the direction of the breakout out of the ascending triangle. If price breaks out of the upper line, then the trend will probably continue to the upside, therefore indicating a bullish ascending triangle. Now, if the price breaks out of the lower line, then the price will probably fall, indicating a trend reversal. This is an indication that price could not break past that level of resistance that normally would be broken in a bullish ascending triangle. Now, trading off of an ascending triangle is similar to the previous strategies established above. We want to wait for a breakout to either the upside or the downside and a retracement back to the breakout line to see if the overall trend holds true. So now, in this particular situation, we're looking at the ascending triangle and we're visualizing not just the bullish scenario, but also contemplating a bearish scenario, right? Where not only price is going up, but price could fail to break out past this level of resistance and now go to the downside. So there are multiple scenarios and multiple ways we can think of these patterns. They're not necessarily tried and true where they'll always go bullish or they'll always go bearish. We want to take into consideration not only when they are valid, but when they are invalidated. In this particular situation, the ascending triangle can both show price breaking out beyond the level of resistance and indicating a continuation of the bearish pattern, or a failure to break past the resistance, which is a failure on the bull's part to produce a higher high beyond these highs observed here, and a breakdown of the market structure, whether that's a temporary thing or something that will be much more prolonged. Next pattern we'll take a look at is the descending triangle. This is once again considered a neutral pattern. It's very similar to the ascending triangle in that they are both neutral patterns. The difference between them is that in the descending triangle, the upper line is sloped downwards as the price is forming lower highs, and the bottom line is horizontal as the lows fall in the same price level. This is similar to the bearish descending triangle pattern, but in this particular case, we're looking to see how price will break out of the triangle and if or how price reacts when retracing back to that breakout line. In a bearish descending triangle, we observe that price would break down beyond this level of support, retrace back to the breakout line, and then continue to fall and continue the overall trend direction. In this situation, we're seeing prices come down into this descending triangle, but this could form a potential reversal, right? It's a neutral pattern. We have to see how price breaks out of the descending triangle pattern. And in this situation, we also are provided the option or the scenario where price not only breaks down below the level of support, but breaks beyond the top part of the triangle, producing a higher high, which is an indication of a market structure shift, right? We come back down, we're looking to see, well, it retraced back to the line that it broke through with the top part of the triangle, forming a potential higher low. this could be a potential long entry, right? In this situation, we don't know if it's going to continue to go down yet, but there's a good chance that this could form a potential reversal because of the fact that it formed a higher high higher than the high observed previously. We also have the symmetrical contracting triangle. This is once again considered a neutral pattern. And we'll also take a look at symmetrical contracting and symmetrical expanding triangles at the same time. In the symmetrical contracting triangle, we see upper and lower lines sloped evenly towards each other, indicating that price volatility is decreasing with higher lows and lower highs being formed. Now, with the symmetrical expanding triangle, we see the opposite. We're seeing upper and lower lines sloped away from each other, increasing in distance and indicating that price volatility is increasing with lower lows and higher highs being formed. That's a sign of great volatility in the market. Now, for both of these patterns, we want to see how price breaks out of the triangle and how it reacts if or when it retraces back to the breakout line. Here's our example of the symmetrical contracting triangle. Once again, we are seeing the highs, we're seeing lowering highs and higher increasing lows converging onto a single focal point. What we want to see is which direction price will break out of this triangle, and to generally make the best trade without taking on too much risk, we want to wait for price to retrace back to the triangle. Whether if it breaks up, we want to see for a retrace down and for it to test that upper part of the symmetrical triangle. In this situation, we would enter a long position. And if price breaks down beyond the lower part of the symmetrical contracting triangle, we're looking to see price to form a low, retrace back up to the lower part of the triangle, where we would then open up a short position. And in this case, we're expecting prices to continue to go down because we're seeing an overall continuation of a potential bearish market structure. This is our situation for a symmetrical expanding triangle. In this situation, we're starting to see increases in volatility. Prices maybe or perhaps in some sort of period of consolidation. And we're seeing gradual increases in volatility, increasing highs and increasing lows over time, as observed here. Increasing highs and increasing lows over time, as observed here. Generally, we want to see where the price will break out beyond the formation of this triangle. Price breaks out above, we're looking for a retracement to the line, and then we would enter in a long position. If price breaks down below the lower part of the triangle, we're looking for a formation of a low and then a retracement back to that lower line, which should then act as resistance. We're looking to enter a short trade to capitalize on the lowering prices.